And Noah, you've been watching, just like everybody else, what happens with this market volatility, what happens with the big swings. What do you think?
Well, I think, this economic contraction that we're probably going to be in for the second quarter and into the third quarter really hasn't been driven by imbalances in the economy. This isn't overinvestment in residential real estate or in IT, and then, Fed policy raises rates until something breaks. This is a much different economic contraction, obviously, caused by this virus, and the shutdown of the economy is a policy choice. So I think that, I don't know who thinks that any company, save perhaps a Walmart and a Kroger, are going to have a great quarter. But we're sort of in a situation where the policy choices have been to shut down, in California, New York, and shut down basically the economies and air travel. And so a lot of the recovery out of this kind of depends on, when the virus sort of tops out, runs its course, and certainly when the policies to shut the economy down come off. But I do believe that there will be lingering longer-term effects, perhaps some permanent effects of what's happened. And some of the areas I think that businesses may be reevaluating is, perhaps office space needs longer term, retailers perhaps evaluating the number of physical stores they need. And I do believe longer term, the mobile workforce and the work from home probably accelerates the move toward cloud-based services and digital transformation. And, enterprises who have on-premise stuff that may be struggling probably accelerates their move to the cloud. Reassessment of business travel. Does everybody internally need to go to the same meetings, or can a lot of this be done over video conferencing and things like that? So I do think that there'll be lingering changes coming out of this, but this isn't really a crisis driven by economic imbalances. It's a crisis really driven by what appears to be, anyway, by what is a virus and policy choices to shut the economy down.
You're not the only investor thinking that. That's probably why we've seen the Nasdaq outperform over the last couple of sessions, done a little better than the other averages, because people are looking at things like those cloud service providers. What is that making you do? What investment decisions are you making as a result of that thesis?
Well, I mean, the speed of this has been unprecedented in my career, and I've lived running the same funds through 08 and 00 and 02. Was there for long-term capital. This is like a little bit of 01, 02, a little bit of long-term capital in terms of, what the ETFs and risk parity funds have done, and it's a little bit of 08 as well. And so, but the speed has all happened in an incredibly short period of time, which may be a market structure question. So I think it's really, maybe if you're a 30-year-old portfolio manager sitting there in your Patagonia and no socks, you're trying to play this quarter. I think what you really have to sort of think about is not this quarter, because everyone's going to miss this quarter and probably next quarter. The question is, everything is down, and which companies have the superior business models and the growth. You're going to have 1.1 million students using Google Classroom, for example, in New York City. Now, does that mean that's going to mean Google blows out this quarter? Of course not. Does that bode well for learning and distance learning, in 2022 and 2023? Probably does. So I think where you have those companies that are enabling this digital transformation, it's an opportunity. But stepping back, I've been a growth investor for the last 25 plus years of my career. But I also think there's a generational opportunity for value investors, and I mean real value investors, not sort of statistical, quantitative value investors, but true value investors that can analyze a business. Because the decline in hotels and casinos and airlines and other things like that, and I don't even know if it's the equity or the senior secured credit, it's almost unprecedented. And I'm sure you have a number of grave dancer value investors out there who probably, these are generational opportunities in some of those areas. Not something I do, but certainly something I can see is an enormous opportunity. The question of when we recover, we also have unprecedented fiscal and monetary stimulus. So we can see over the valley. The question is the depth and the length of that valley. And those are policy and medical questions that a lot of us don't have the answers to right now, but we can certainly see the other side.